Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday. It's July 18th here. We got just a couple economic news releases to go over today. We'll start off with import prices. This is kind of just a more or less a fluff piece, to be frank. We got a 0.5% drop in the month of May, and then month of June it only had a 0.2% drop. But here's a piece that we do want to look at, and this is the Home Builders Index. This is kind of a gauge that provides us insight of their confidence levels. It kind of shows what the home builders are thinking, where things are going, and if it's the higher, they're more confident, of course, building more properties. So as we could see, back in June we had a 66 on their index level, and then July dropped 2 points down to 64 here. So again, something we want to keep an eye on. The market has been slowing down. Fannie Mae came out with a report. They think they revised their growth in home sales, which was like 3.3%, and they think it's going to slow down the second half. And a lot of it is due to constraints in the inventory level. We just don't got a lot of inventory out there, so they think it's going to, of course, shrink a little bit here going forward a little bit, at least end of this year. Headline news: we got stock market's a little mixed. We got, of course, earnings reports coming out, so we had some good earnings reports and some not so good, or at least disappointing, maybe not bad, but at least some of them disappointed from what they want. We had the revamped healthcare bill we talked about that got dropped. Just does not have enough support. That one's not really affecting so much the markets. Again, pretty much this week you can really see the earnings reports could be more the deciding factor of where the stock market's going to move or not. So let's go ahead and take a look at the bond news here, and the bonds keep rallying here. Something to note, a couple weeks ago we talked about this death cross and golden cross. Well, they happened, so now we're kind of see some effects here. We're kind of hoping that this is will keep driving, but we can never be certain for how much improvement or worsen it'll get. But the 10-year Treasury did hit their death cross, and the bonds hit their golden cross. So basically what that means is that the 250-day moving averages crossed over, and so basically did this in the as you can see here, we're starting to see a nice little rally here. We're up currently about 25 basis points. We're just edging above the 200-day moving average, and we could see a nice rally in rates coming forward here in the near term here. As a result, and less money be going into the treasuries, and hopefully go more in towards our mortgage-backed securities and help out interest rates here as a result. So yes, interest rates are improved today. Again, we're up about 25 basis points, so that would translate to about 1/4 point in your pricing for an interest rate today. So good news overall, and let's see if we can see this continue going. Now, as you can see here, we did see some improvements where we drew back, but today it looks like it's going pretty strong, and looks like we can keep going as well. So we'll keep our fingers crossed and see how much of a rally we get here. All right, so that pretty much concludes it, but if you guys want to get more updates, just come on over to Twitter. I'm on Twitter at Mike Bjork, and you can catch more updates throughout the day. Also, if you guys are in the market for a mortgage, like looking to buy a property, I'm here for pre-approvals as well as helping with the financing. We also do refinances. We can help out clients going from adjustables into fixed rates, or those who are looking take money out of their properties, or going from a 30 to 50 year. Or perhaps you've had a high interest rate 30 year and want to go into a lower rate. So we do still see those out there as well. Just feel free to reach out. Email is the best way to contact me. I hope you guys have a great day. We'll look forward to see you guys tomorrow. Thanks so much for watching. Bye-bye.